Hi everyone and welcome to another video from the Motley Fool. I'm Owen Benelak and I'm here with Nate Weishaar.
Hey.
Hi Nate. To discuss some news I read this morning / last night. I read it twice. And it was on the news that the Nasdaq exchange in the US is going to set up a venture with a company called SharePost, which I think is based in California, to basically provide a market for unlisted companies. So this would be Facebook before Facebook was floated. We all remember the spectacularly unsuccessful float of Facebook. Before Facebook ever came to market, you could buy shares in Facebook. They were traded, but you couldn't do them if you were you or I. So Nasdaq is combining with SharePost, who already offers this service, to produce this new kind of official exchange in unlisted companies that nobody knows anything about. What could go wrong, Nate?
Not a whole lot. Well, there's a whole lot that could go wrong. I mean, the big question is, who has access to this stuff? The rules say that you have to be a sophisticated investor in order.
I'm a sophisticated investor, aren't I?
I am as well. Can't you tell by the way I dress? But a sophisticated investor, as defined by the SEC, is they must have sufficient knowledge and experience in financial and business matters to make them capable of evaluating the merits and risks of the prospective business.
That does kind of imply the SEC doesn't mind if investors buy companies who they can't evaluate, provided they're not, buying them through the service. It's a bit of a strange definition, isn't it?
Yes, it's a pretty loose definition, and I'm not exactly sure how they validate
police it
your sophistication.
Yeah.
So there's definitely potential for this system to be painful for several investors.
But I'm going to defend it to this extent. Already these services do exist. And I think one could argue that in some ways the average investor like you or I have kind of been kept out of this. And companies like LinkedIn, Facebook I've already mentioned, some other companies have achieved pretty high valuations before we ever got a chance to invest in them. It's not like, say, AOL or Amazon in the 90s where you could get in on the ground floor and lose your money. It was pets.com. People haven't had the chance to lose their money in these companies yet. So isn't it a good thing from that point of view?
Well, I think there is a good aspect from an investor standpoint, but more so from the company's standpoint, because it gives them greater access to capital. And in this time when banks are having, shall we say, hesitation about lending, these small companies need access to capital, and this could provide an avenue.
I think the US has even changed the regulation about how many shareholders you can have in an unlisted company, specifically for that reason, because they want to get more capital going into new companies.
Yeah.
So there you have it, guys. Probably doesn't really affect us in the UK immediately, but it is perhaps an interesting shape of things to come. More markets are being created and we're having more opportunities to invest.